L Brands getting a nice pop following an upgrade. It is our call of the day. Bank of America upgrading that stock to buy, raising its price target to $25 a share. Analysts say the stock is cheap and the company's Bath and Body Works brand is, quote, one of the best stories in retails. L Brands gaining nearly 8% on this otherwise down day. So is L Brands a diamond in the retail? You like the stores. You were just saying.
Steve and I were just talking about,
fragrance
potpourri, get the candles, the whole thing. Facial scrub, which I'm a huge fan of.
They sell ties?
Pardon me?
What?
I knew where you were going.
Very good.
So I like the story. Yeah, we talked about this a few weeks ago. Yeah, again, you have a huge double bottom. We talked about that. The stock has a 9.5%, 10% short interest. Valuation is compelling, and it can overshoot to the upside. Deutsche Bank, I think, initiated with a hold $22 price target in mid-December. You saw the Bank of America note. I don't know if it gets to 25, but I have a pretty good feeling it gets to like 20.5, 21, which is basically where we dropped down from if you go back and look in late August.
Kristina, how healthy is the consumer?
Well, I am concerned about the consumer. It looks very healthy right now, but there's a vulnerability built in there because we know such a large cohort of consumers doesn't have much in the way of savings. In fact, a bank rate survey.
Paycheck to paycheck.
Exactly. And so if anything were to change about the employment situation, which is admittedly excellent right now, but if something were to change, that could introduce a significant amount of pressure on the consumer. And I think we've been riding the consumer for so many years now, we've come to accept that the consumer will always be there and will always be strong. There could be a day of reckoning.
What about with the record low levels of unemployment? I mean, this is something where I get what you're saying, but I think we have a huge amount of slack.
But it's not working in autos. It's not working in consumer brand names. If you look at the equal weighted sector, it's making 7-year lows. I mean, if you get rid of the big high flyers, Home Depot, Nike, Amazon, Starbucks, the sector, the stocks that one can invest in are terrible.
Yeah, but I don't know if that's a reason or if it's just where money's flowing to certain
Right, but
names.
if one is still trying to invest against a benchmark, this is not an area that's working.
Well, I think so many companies are still trying to figure out exactly which channels to exploit, how to emphasize online versus in-store sales. But for me, I just think of statistics like 28% of Americans have no emergency savings. There is only a small portion of Americans, less than 25%, that have more than 6 months in savings. So there's a built-in vulnerability if something were to go south in the employment situation.
Well, and if oil prices go up and keep going up, that's going to take more money out of the consumer's pockets.